today's episode. I am the billionaire trader. So in this video, I want to explain a particular type of entry model that you can actually use. So I'm going to start from 4 hours time frame. I'm not talking about directional bias here. I really want to talk about entry model. So we have this sweep and break. Let me change to the line charts. We have this sweep and we have this break. We already know that okay, we are buying. So where is our entry? So on 4 hours time frame, looking at this particular area, we have OCL. We have OCL. All these candles are bullish candle. So let me just mark out the area that I'm interested in. Around this area, I'm interested in that area, and I'm also interested in this area as well. So any of this OCL, let's go to 2 hours time frame. So on 2 hours time frame, okay, I'm coming. I want to do something as well. We also have OCL here too. And what do we mean by OCL? Open close key level. Open close key level is where we have two candles that are the same thing and we have the wick that interlock. That's what we call OCL. I call it OCL, open close key level. So we want to look at any of these bullish candle that have OCL, and which of them has bearish candle within it. That's what we want to check. So looking at this, we notice that this is the one that has bearish candle. That's a strange candle. That is an hidden base, so on 2 hours. So if you go to your line chart, you will notice that it is a breakout on 2 hours. So we have a breakout here. Well, good. So now let's go to 1 hour time frame as well. You will notice that we have sweep and break on 1 hour time frame. So on 4 hours time frame, we have OCL. On 2 hours time frame, we have breakout. On 1 hour time frame, we have sweep and break. So what do we need to do? That's not all. Let's go to 15-minute time frame. I want to go and refine on 15-minute time frame. You will notice that on 15-minute time frame, this is still the structure. We have this low here, which will serve as our inducements, and we have mitigation here, 2 key levels here. You can see we have a meeting. So let me go to the candle chart. As you can see, so this is going to serve as our inducements. Yeah, it's going to serve as our inducements to be taken out, and this is going to serve as our entry. Why is it our entry? We already have a mitigation between the 2 key levels here. So this is the entry we have, and the low of this candle is going to serve as our what is it called, as our stop loss. So this is a kind of our entry here, our stop loss here, and this has already done how many naira? 5 naira. Just imagine, by just refining the entry and taking it to this high, so that's like 14 naira already. So starting from 4 hours time frame, mark out your OCL on 4 hours time frame. On 2 hours time frame, you want to see a breakout. On 1 hour time frame, you want to see sweep and break. On 15-minute time frame, you want to see two structures that already mitigate each other and it's going to have induced. So that's how we do it. Let's check. I also have the same thing on all the USD. So let me use that one too to for the explanation. So let's go to okay, let's go to this 4 hours time frame. You will notice that we have the same thing. We have sweep and break on 4 hours time frame and we want to buy. So let me mark out the OCL key levels here. We have this OCL here. So those are the OCL. Let's go to 2 hours time frame. You notice the same pattern on the same layers. So on 2 hours time frame, we also have a breakout on 2 hours time frame around that OCL, we have that breakout. So let's go to 1 hour time frame. So on 1 hour time frame, it's still a breakout, not a sweep and break. So let me change to okay, let's go to 15-minute time frame. So on 15-minute time frame, what do we see? You will notice that we have two breakouts. That's what you need to observe. It's going to be two breakouts, and both are going to mitigate each other. So we have this breakout and we have another breakout here. You see the low created before we have this would have been mitigated. This particular low is going to serve as a liquidity. This is going to serve as a liquidity, and this is going to serve as our entry. So stop loss below the low of that candle. So let me change to the candle charts. As you can see, perfect. So that's our liquidity, and we have our entry here. So stop loss below this particular low here. That's 1.8 pip, and this has done 7 hour already, and we take it to this high. That's 25 hour. So using this particular entry model. So let me start again. 4 hours time frame, you want to see OCL, like you already have your buyers, everything in order, so you just want to see OCL. So you mark out the OCL, then you go to 2 hours time frame. You want to see breakout on 2 hours time frame. On 1 hour time frame, you can either have a breakout or sweep and break on 1 hour time frame. Then you go to 15-minute time frame. On your 15-minute time frame, you want to see two structures that have mitigated each other. And the second structure, we now have a what is it called, an inducement before the break. It will have an inducement before the break. So that inducement before the break is just a liquidity. So the key level next to it, and it would not it will not have mitigated the second key level. What do I mean? The structure before the break, and you are going to have a fresh key level here. Yeah, a fresh key level will still be there. So that is what actually confirmed that the one above it is just a liquidity. It is this fresh key level below it that is going to serve as the entry. Then you set your limits, stop loss below that, the low of that candle that's from the key level, and then you take it to whatever you want to take it to. Thanks for joining me today. I hope you learned one or two things today. Have a blessed and profitable day.